beach. So I did the move in August.
Ah, well, there you go. Well, we'd love to have you here at the beach. And let me remind our viewers today that if you are watching on whichever social media channel you're watching, you can always type in your questions in the comments and we'll try to get those on air. And at least, if nothing else, just let us know where you're from and where you're listening from and that kind of stuff. But Laurie, as a realtor, I know that it's how important it is to speak to a lender before you get started in the home buying process. That to me is the number one thing that you have to do. Yes. Because there's no sense in looking for a home if you're not pre-approved. So tell us a little bit about that process and what you do when you have that first conversation with someone.
Well, the first conversation, I always say that let's get it going because we can put it completely through underwriting so that when you make an offer, it's basically a cash offer because it's already been done. And also in pulling credit at that time, I can kind of look at somebody and say, hey, we got a little bit of work to do before you do it. And they may qualify for something, but if I tell them what to pay off or something, then we can qualify for more. So if I do that all in the beginning, we have time to do the little tiny things along the way before they find a property.
Yeah, that's great. And you know, we're going to get into this a little bit later, but talking about credit, I did a little scenario the other day, and just moving your credit score 20 points can put you into a different bracket to where somebody that, you know, for the same payment, you can get a $650,000, $700,000 house versus what you would have at a $500,000 house with just that 20 points. It's crazy at how that makes such a difference. And you know, we run into that often, and that's why it's so important, because you're right. Sometimes you could just pay a credit card, put $100 on it, and it's going to make your score go up because it brings that, I know I've heard it many times before that you want to stay under 30%. I like to stay under 10%. Whatever your available balance is. But any feedback or suggestions on that kind of stuff?
On credit?
On just paying off those bills. And I know that's part of your consultation that you do with the buyer, but just, you know, where do you feel that they need to be as far as the 10%, 30% or whatever their balance is?
Well, I like 20%. Because it does make a difference. 30% or a third, so 33% is what everybody says. You know, especially if you've got a brand new credit card and it's been under 6 months or a year, you don't want to go over 20% if you can avoid it at all. And I always recommend buy a tank of gas, pay it off. Yep. And as long as you keep that money in there and rolling, it gives credit. And different credit cards have different reporting, like we'll say a Macy's or something like that doesn't hold near as much value as a MasterCard or Visa.
Right. So, and sometimes those places like the department stores, they only report like once a quarter. They're not an every month thing either. So you could have a very large balance and it report, and then you pay it off, but it won't show up for 3 months. That's something else that it brings up a cool point that I've learned a little bit ago, is that don't pay off that credit card until after your statement comes out, because you want to make sure that it reports. If you get a tank of gas today and pay it off tomorrow, it really doesn't matter, because you're not allowing that to report. And
you show zero balance, so it doesn't give you any credit. Like some people have gone in and paid off a vehicle, like their credit's kind of on the border, and they'll go in and pay off a vehicle, which they think is doing good. But once that's paid off, a lot of times that credit history kind of goes away and your scores drop.
Right.
So I always recommend if I'm doing it, talk to me before you do it.
Right. You know, that's a good point too, because you don't want to close a credit card either.
Right.
Because if you, just for easy numbers, you have a $2,500 credit limit. If you close that, now you don't have that available credit, and that actually can hurt you more than it can help.
Exactly.
Yeah. So when you talk to somebody initially, one of the things that they're going to want to know is that their W-2s, their tax returns. If you are a independent business, sometimes you can just get the bank statements. But how important is it? I can't stress this enough, but I want to hear it out of your mouth. How important is it to get those documents to you as quickly as possible, because that just really, it extends the time.
It's a matter of whether you close on time or not sometimes. And I've got a deal that I do in that if I can't get it within the third day, I call the realtor and say, hey, I can't get the documents. Maybe you can talk to them. And sometimes the realtor talking to them, now they know that we're sharing information, and they know that it's now not on me or the realtor, it's on them.
Right.
And I hate to do that. I do it as a last resort, but if I can't get the information and we're coming down to the line, I'll call you.
As a realtor, I would prefer you call me, because a lot of times as a realtor, we build that relationship, but a lot of times it's in person.
Right.
You know, a lot of times the lender's just over the phone. They don't get that face-to-face. So as a realtor, you have that face-to-face. So sometimes it's actually seems more urgent when the realtor does call them. I also give my clients a list of saying, this is everything that, or this is not everything. This is a long list of what the lender is going to need. So go ahead and start getting that stuff together, because they're going to ask for it up front.
A lot of times we don't need everything. So when somebody asks me what they need, it's like, let's put you through the system first. Yeah. Because I do loans with a W-2, a pay stub, a driver's license, and a bank statement to show you've got the funds to come down with. Right. I don't need.
In 2008, you didn't even need a driver's license or a birth certificate.
You just needed to fog a mirror.
That's right. You didn't even need to fog.
We used to go.
Hey,
yeah, I know, right?
Hey, we do have a question from one of our Facebook friends that says, are there any benefits in applying for as a single person or as a couple?
Loaded question, in that depends on your income. Depends on credit score. If you've got the income and the credit score and your spouse has bad credit, but good income, if we keep them off, we can still put them on title. So they still have ownership, but you're going to get a better rate and everything's going to go better if you have the stronger side and it's single. If you can qualify with just one side, and it benefits on the credit if it's a huge difference. And I'm working on one now that there's 120 points difference in the credit report. I mean, in the credit scores. So we left them off, and the interest rate difference was 0.5%.
Wow.
And so
is there a way that if you're in that situation to where the spouse has bad credit, but they have more income, is there a way for the other spouse to count any of that income?
No, not if they're not going to be on the loan. But there's a lot of things I can do to pull the spouse's credit up, and sometimes it's fast. I mean, we had one that literally, it was the dumbest thing in the world I've ever seen. For $34, we pulled her credit score up from, and it was an even number, which even made it weirder. She paid a credit card down $34 and got 34 points on her credit report, which made her eligible for the USDA, $1,000 out of pocket. And she got the house with $1,000 out of pocket for $34. It was wild. So, there's all kinds of things. And I've been fixing credit for 23 years for people that, are just on the border one way or the other. It's too easy to get them to the next level.
See, folks, that's why I say it's so important to talk to a lender first, because it can make a world of difference when it comes to purchasing your home. So
absolutely.
Laurie, one of the things that I know was an issue during the COVID times, especially when it started, was it seems like everything was being delayed. A lot of people working from home. It took longer to get the information. Some of the people that worked in maybe public records or something that you need to find documents for weren't working, so it was harder to get that information. We saw closings go from the typical 30 days. Some were even 90 days that we had, especially if it was an investment property or a second home. But we on the real estate side have seen that tighten up a good bit. How is it on the lending side?
I haven't seen a 60-day closing. I just did one in 17 days.
Wow.
They were with a different lender. Something happened in the end. I jumped in, got it, and 17 days later, we got it closed.
That's awesome.
So it depends on the strength of the borrower. Investment is the only thing with investment is the appraisal is a little more detailed. And that's the only thing. They'll give the appraisal a value of what the rental income is in the area. So they're a little more expensive and stuff like that. Second homes have been treated like a primary residence until April 1st this year. On April 1st this year, interest rates are going to go up on second homes. So if you're going to buy a second home, close before April 1st if you can.
Yeah. Well, so, can you still lock in those rates though if you do it before? No, you're not going to be able to.
You can lock in the rate, but on April 1st, the rate will change. And it's not a matter of we qualified, we got loan approval, we got everything else. Like FHAs and VAs, they're retroactive, I guess. No, they'll hold on to it. That's not retroactive. They'll hold on to that commitment going forward. This is not going to be a moving forward thing. This is on April 1st, rates change.
Yeah. Well, so, even single family FHA and VA rates and conventional rates are going up as well. We saw a little bit of a hike, a couple of weeks ago or whatever, but I hear it's going up again in March.
It's supposed to have 4 hikes.
The only plus side to that is that when the rates tend to go up a little bit, the market corrects itself a little bit as far as the pricing. So a lot of times you'll see that balance going on. So we should see some of this high pricing coming down a little bit, I hope, if the rates go up.
We can hope.
Who knows? Who knows? It's always
nothing normal about the last 2 years. No, and the buying frenzy and the everything.
Yeah, it's a game, that's for sure. And that's why it's so important to work with professionals that are in the business regularly and that know what's going on and whatnot. So I want to talk a little bit more about some of the credit stuff as well, and the process of getting started when we come back after the commercial break. So stick with us, guys. And remember, if you have a question, make sure you type it in your comments, and we'll see if we can get those on the line or on air here very shortly. So stick with us. We'll be right back after these messages.
Hi, I'm Justice Ann. I've been a canine liaison at Grand Strand Law Group for, 30 years? What's that? You don't believe me? I meant 30 dog years, of course. First rule of lawyering, read the fine print. Anywho, my humans at Grand Strand Law Group have a combined 20 years experience. I know, not as much as me, but that's in people years. So yeah, still pretty impressive. Real estate, estate planning, or probate, you need GSLG.
Grand Strand Law Group. Trust us, we have a dog.
Great Business Networking grew out of the idea that by creating lasting friendships within the community, we can make the community even better.
I was looking to network with professionals and to be able to refer my clients to somebody that I trust.
Well, it's really important to trust the members of the group because we really generate quality referrals, and to know somebody, be friends with them, and get that qualified referral is the key to success.
It is networking, but it doesn't feel like networking, and that is important to me. I come to the meetings, I have fun, I make great connections, and I help grow my business.
GBN, these are some of the best professionals in the market, and having that resource available to me, that's priceless.
Well, GBN is a network of business professionals that build long-lasting friendships that will not only grow my business, will grow yours as well. That's what referral marketing is all about.
GBN really is the most important marketing for your business. Check us out today. All right, welcome back to GBN Live. I'm Todd Cartner, your host, and today we have with us Laurie Weatherill, who is a mortgage lender, and she's part of our Conway Main Street Chapter. And once again, let me remind everyone, if you have any questions, please type them in the comments, and we'll be glad to try to get those on the air. Laurie, we talked a little bit about that credit earlier and about how important it is to make sure your balances stay down. But if somebody needed to jump their credit score as quick as possible, is there something you recommend? I've heard people say go grab a credit card and try to work on it or whatever, and that's going to take at least 6 months to do because they usually don't report the first couple of months. But is there something that you really recommend? Just pretty much anybody that would be able to boost their credit score
right away.
Well, within 30 to 60 days, obviously. I mean, you're not going to be able to do it immediately always.
That's just looking at a credit report and seeing if they've got late payments. Some things are roadblocks. I mean, definite roadblocks. I mean, if you paid a payment late last month, it's going to take you a couple of bits. But sometimes it's, I look through it and I've got this calculation thing, and sometimes a matter of a couple of dollars. Say you're going to pay it down to 30%, but if you do it to 27%, it makes another difference in your scores. So each person is individual based on how long they've had credit, how much credit, how much balance they have. Collections, medical collections aren't supposed to count, but they do. I have found that a lot of the collection companies with the medical, if you pay it off, they'll take it off the credit report right away. They'll send letters and then we can get it corrected. Not all of them will do it, but a lot of them can. And my biggest thing is ask. If you don't ask, the answer is no. If you ask, it could be yes.
So when you actually meet with these people about their credit, can you recommend things that they may be able to challenge? If there's something on there that is very old or whatever, sometimes that makes a big difference and sometimes it doesn't. But that's something you can kind of guide them in the right direction there. Absolutely.
We've had people that have had bankruptcies in the past and they've been on the credit report and they're only allowed to stay on so long, 10 years for a bankruptcy. It doesn't impact after 7, so they say. But a good friend of mine had a bankruptcy. It was staying on his credit report even after 11 years. So I challenged him to challenge the credit bureaus and they took it off and his scores weirdly went up like 64 points.
Oh, wow.
Yeah. And it shouldn't have impacted at that age. I mean, it was 11 years old. It should not have any impact on the credit. So not everything follows the rule. You kind of just have to know what you don't know.
Yeah. And you can't always ask for, what do they call it? A hard score or something that where it forces an update in between the reporting time.
A rapid rescore.
Rapid rescore.
And that's if, say, we have somebody bring their balance down, then they give me a statement and I turn it into the credit bureaus and they'll instantly fix the credit. And we only have to do 2 out of the 3 because it's only the middle score that we use. So I only have to fix 2 of the 3 bureaus. And there is one bureau that is tougher to use than others. So if I don't have to use it, I don't. There are certain credit cards that I'll just say it doesn't matter. It doesn't matter what we do. When they report, they will not report or correct anything ahead of time.
Right.
Sometimes if somebody doesn't have a score at all, getting a credit card can take them to 700 plus credit scores with just one credit card and where they didn't have credit scores before. So there's not really a rule because sometimes the rules don't work for this person and they do for that. And the one that shouldn't work works.
Right.
And it's like, man, why does that work? And sometimes paying one down under 50% has no change at all. But changing something else that shouldn't mean anything changes it all. And it's like, man,
it's a necessary evil because sometimes I wish that they would just go away because I don't think that they're ever are apples to apples. It's never, you could have 2 people been on the job the same amount of time, have the same number of credit cards out there. They have the same number or same amount of debt or whatever. And this one's 40 points higher. And you're like, what in the world? So
why? Yeah.
Yeah. It doesn't make any sense. Have you seen any changes since COVID started in the mortgage industry that would be either programs that are more helpful or programs that have tightened up so much that it makes it harder to get a mortgage?
I don't know if some of it is related to COVID or not, but I know during COVID, some of the appraisers wouldn't go in homes, and some of the people wouldn't allow them in their homes. And so some of those guidelines got changed so that the appraisal could be waived if certain restrictions and stuff were in play. They would allow it to do a drive-by to make sure that the house is still there and stuff. We've seen things like people that work from home. We have to get letters from businesses saying they are eligible to work from home. It's not they're just home because they don't want to go to the office.
That brings up a good point on the appraisals, because sometimes you could have, in a cookie cutter neighborhood, you could have the same model on Smith Street and the same model on Main Street or Pine Street, whatever we want to call it. And one of them has some granite countertops. They have LVP flooring throughout the whole house. They have upgraded lighting throughout the house, walk-in showers, everything else. And the other one was builder grade on the lowest end. They're not apples to apples.
No.
And that
and
did hurt some
an
appraisers.
appraiser that knows what they're doing.
Right.
So, and not all appraisers care. And that's the hard part about what happened when they changed the appraisal guidelines, is now you just have Joe Smith that just wanted to do it and make money, but he doesn't care about his business. And I've learned that when you hear that name, you just cringe. And there's things we can do about it. Like we take them off our panels. We just won't even let them be on it.
And I'll tell you, as a realtor, I've complained about some of them and have asked a couple of the lenders I've used in the past to get rid of them because they weren't apples to apples. I had a house that I felt was priced perfectly in North Myrtle Beach, and the 3 comps they used, because it was a 6-bedroom house, they used down in Garden City and Surfside, because they didn't have any that had sold in the last 12 months that they could compare it to in North Myrtle Beach. Well, that's apples to oranges, because it's 2 complete different neighborhoods. So, are there any hot market products out there right now that someone should either ask about, inquire about, or just be aware of that are with your company, or even federal just level or whatever?
Well, anytime you can use VA, you use VA. I mean, especially if you've got a disability, because you don't have that upfront funding fee. Right now, a lot of people are first-time home buyers with limited or no down payment. There's down payment assistance programs. If they go just a little further west, there's USDA, and you can get into a USDA home for $1,000 if you can get the sellers to pay the closing cost and the appraisal comes in and all of that. I mean, literally, it's $1,000 out of pocket.
Yeah. And some of those down payment assistance programs, you don't have to pay back as long as you stay in the home for X number of years. There's different ones, but I've seen some as low as even 3 years. Some are 10 years. It just depends. But
I'm working on one, but it's in Arizona. It's a 3-year 0%.
Oh, wow.
In Colorado, we have 30-year 0%, but you do have to pay it back. Here, they're all over the board. So there's, depending on which one you find and which one you qualify for, you've got all options. So
we have another question from a Facebook viewer that says, which type of mortgage terms do you offer?
All of them.
Yeah.
I mean, I don't think there's a program out there that we don't do. Anywhere from CHAFA, VA, FHA, USDA, conventional. And then there's, 10, 20, 30 year fixed.
Right.
So
are they even allowing anything longer than 30 years?
Not that I've heard of lately.
Yeah. I know at one time they had a 35-year loan out there, but I haven't heard of that in a while.
They had a 40 for a while.
Oh, did they? I haven't seen them that go. I've seen 35, but I haven't seen 40. That's interesting.
And if you do the math, your interest rate is higher. You have now a 40-year term. And if you do the math in your APR and you figure out what you're going to pay in interest over the years, man, you run from that. Buy a little less house and run from the 40-year, because you're saving $20 a month. I mean, it depends on the value, but you're not saving a lot.
No. I think sometimes those type of loans are more for people that aren't planning staying long term, and they're just trying to save every dime they can up on the front end. I do know that I have a cool little worksheet that I put together that tells you if you make X amount of payment or X amount of money over a payment, how soon you can pay your mortgage off, how much interest you would save in the long run. And it's actually interesting. If you pay even just one extra payment a year, you can knock off a couple years off your term on a 30-year. But if you pay one extra payment a quarter, which I know that sounds like it's a lot of extra money, but sometimes if you have a $800-900 well, let's even say $1,000 payment, and you pay an extra $300 a month on that, if you can, then you can pay that 30-year mortgage off in like 26 years. It really comes down a lot.
And I've got a calculator that I use on my phone that has that option where you can look at it, and then it tells you what your interest has been over the years. And I sit down with a lot of people. I still meet people face to face if they're up for it and everything else. I still like to know who I'm working with. But I show them the calculator that I've got on my phone and how much they save, and everybody's in awe. I mean, and they say, well, I can't make an extra payment a year. I said, okay, so take that payment, break it into 12, make that much extra a month. And then it seems more doable for them. And then I show them on my calculator, if you make this much extra a month, here's how much you're going to save. So,
it's funny. It's funny, along those same lines, I had a lady that was a single mom. She was paying way too much in rent, had 2 kids. And I told her, I said, look, go get a part-time job. Doesn't matter how much you work, a couple days a week or whatever. Take 100% of that money, because you're not used to having it. Take 100% of that money and pay your card or your bills down, your credit cards or whatnot. She did that for 7 months. And not only was she able to get into a home, her payment that she was paying for rent was cut in half with taxes and insurance, and she got a much nicer place. And it took her 7 months to do it. So it really depends on how motivated you are, I guess, to make things happen. But one thing before we go, Laurie, I greatly appreciate you being on, but as part of our organization with GBN, I'd like to hear what you think about it, how networking is important to you, and what you would say to anybody out there that's watching that may be interested in joining referral networking organization.
You got to do it. I mean, it's good. Like with GBN, friends first, business afterwards. I mean, it holds true. I've made friends through there that I would have never met. I've gotten business that I would have never had. I've been able to share business with them that they would have never had if we hadn't met. So, I mean, it's especially for the cost, you don't get any better marketing. Yeah,
that's true. Well, Laurie, thank you again so much for joining us. If you guys are in the market for a mortgage, give her a call at 970-567-4514. That's 970-567-4514. Or better yet, go visit her at the Conway Main Street Chapter, which meets at 412 Main Street, which is the Costa Bowls in downtown Conway, South Carolina. Thank you so much for joining us, Laurie.
8:30 on Wednesdays.
That's right. 8:30 on Wednesday morning. So thanks so much. Next week, we have Denise Felt with us, who is with Escape to Bliss Travel, and she will be here coming from our Summerville, South Carolina chapter. And again, it'll be next Wednesday at 11 a.m. And remember, if it's Wednesday, it's GBN Live. Y'all have a great week.